everyone! Welcome to Casual Crypto Chats by Exo Ventures Consultancy. In these video series, we discuss our latest blog posts and any other market updates that are current within the market. In this video and in our blog post, we talk about bull traps. We'll be discussing how bull traps happen, what they are, show you some real-life examples, and give you tips on how to avoid getting trapped yourself. Okay, so before we do get started, please take into account that this video and all other content provided by Exo Ventures Consultancy is for educational and entertainment purposes only. This is not financial advice, this is not investment advice, and you should do your own research on anything that is discussed within this video or any other content provided by Exo Ventures Consultancy. In fact, please do your own research on anything that you find online on the internet at all. The ethos of crypto is, after all, to validate and verify everything for yourself. Also, if you find anything useful within this video, or if you just like the content, please make sure to like the video. It really does help us with the algorithm to get this video out to more people as possible. And also subscribe and hit the bell notification to stay up to date and continue following along on this series. And we also have another series on technical analysis, so make sure to check out that one as well. And yeah, let's get into the content of this video. Okay, so what is a bull trap? A bull trap is a situation where the market tries to fool traders into the wrong trade. Basically, the market gives you a false signal that the downtrend or downward move is over. My cat is moving the camera. Okay, so bull traps basically are also known as fake outs or a sucker's rally. Ultimately, it is a situation where traders buy an asset thinking that the value will continue increasing, but as soon as they finish buying in, the price quickly declines and forms new lows. And then basically these traders are trapped in a bullish trade. That's why it's called a bull trap. Okay, so how and when do bull traps actually happen? Bull traps tend to happen in situations where everything is highly uncertain. You'll see two examples later on in this video of bull traps that happened in 2022, so this year. A year in which so much of the economic and political situations and environment, especially in Europe, are highly uncertain. Additionally, bull traps also tend to happen in situations where a lot of rumors or false information are circulating around. Basically, a bull trap happens because traders see or think that the downtrend or downward move is over, and they want to be the first one to step into this winning trade. Okay, so let's start off with the first one. This is the Nasdaq 100. And as you can see, the green line that I have in the middle is the line that, if we start from the left to the right, it forms the first base for support. Around the middle, you can see that price touches it again, and then more to the right side of the chart, you can see that price broke down from that area. Then price moved above it, broke above the resistance line, came back to touch that green line and turn it into a support line. So great, now you're thinking, awesome. Price broke down but then broke back above this line, and now it's holding it as support. This is where we enter to go into a long trade. And that's exactly where the bull trap happens. You enter the trade, it goes well for a while, but then shortly after it starts declining back down, crashes below that line, and then continues moving to new lows. Alright, now let's go for the other chart. This is the Bitcoin chart. And as you can see, we have two of the green lines in this one. One is a previous support line, and another is the resistance number 1 is a resistance line, and the resistance line 2 is support that turned into resistance afterwards. So as you can see, with the break of resistance 1 and the break of resistance 2, and then price moves back and touches resistance line 1, so you think, fantastic, it's holding it as support, this is where we're gonna keep going up. But then unfortunately, that whole situation is also the bull trap, and then price breaks back below both lines, continues moving lower, and ends up making new lows for this cycle. And that, my friends, is how you see actual bull traps happening in real life. Okay, so now you might be thinking, okay, Daniela, that's great, I get it. I understand what a bull trap is and I could see one in real life, but how do I avoid getting stuck in one myself? Don't worry, I got you. In this next part of the video, I'll be discussing some tips on how to avoid getting stuck in a bull trap yourself. Let's get into it. Alright, so the first tip on how to avoid getting stuck in a bull trap is to not enter breakout trades that happen on low volume. Let me explain. So basically, you see price breaking out, moving up, increasing, but these up moves are led only by those hopeful believers thinking that the bottom is in and this is it. This is going to be the winning trade. But there are no additional buyers stepping into the market. It's only these initial traders that are stepping in. So low volume breakouts, no go. Alright, so for tip number 2, apart from checking or combining the breakout with proper volume, you also have to combine your breakout with other technical indicators, specifically with a bullish candlestick pattern. In our Technical Analysis for Beginners series, which you can find in the description below, we explain what's happening with price and how you can read candlestick charts and candlestick patterns to give you a better idea of where price might be heading in the future. Alright, the third tip on how to avoid getting stuck in a bull trap is to combine the breakout with other technical analysis indicators, such as moving averages, relative strength index or RSI, stochastic. Basically, you can combine it with different indicators to avoid getting stuck in a bad trade. My cat in the background. Okay, anyways, the fourth tip on how to avoid getting stuck in a bear trap is to verify any and all bullish information that you think might be pushing the price up. By verifying this information, you can know whether this move is based on a false information or a rumor. But apart from verifying the information, let's say you do verify that everything is true, check with all the other previous tips, because it could also be a sell the news situation where you think price is going to continue moving up, but that was it. The move was capped and then it continues moving lower. So verify the information first and then combine it with all the other tips to make sure that it's not, again, a bull trap. And the final tip basically for this video is to control your emotions. Most fake out situations within the market happen because of FOMO or extreme fear, greed, human emotions that when placed into extremes and you're letting your emotions control what you decide to do, almost always end up badly. So control your emotions. Hype and situations where FOMO is like really high within the market are easy situations to get a lot of traders trapped in the wrong direction. So please, if you take anything away from this video, control your emotions. Don't buy into only FOMO. Make sure you have other things supporting your trade. Okay? Alright, ladies and gentlemen, that's it. Now you know what a bull trap is, in what kind of situations they tend to happen, how to spot one in real life within the charts, and what you can do to avoid getting stuck in one yourself. Now go forth into the world and trade knowing all this new information. So within the current bear market situation for Bitcoin, what do you think? Do you think a bull trap has just happened? Do you think we still have a long way to go before an actual bull trap happens? Or do you think there won't be any bull traps anymore in Bitcoin's future scenario? Let me know in the comments. I would love to know what your thoughts are. And let me know if you have any other specific topics that you want us to discuss here on our casual crypto chats. Right, and let me just repeat myself again. If you found anything in this video helpful or entertaining, please make sure to give this video a like, subscribe, and hit the bell notification to follow along with this series and also with all other videos that we provide here on Exo Ventures Consultancy. And if you want, let us know in the comments about any videos that you want to see or any feedback that you have. We would love to hear your thoughts and your opinions. Other than that, thank you so much for watching, and I look forward to seeing you in the next one. Bye!